NIO, a Chinese electric vehicle manufacturer, continues to see strong demand for its luxury electric SUVs, even as it expands its electric vehicle inventory and develops new EV batteries. The chip issue, on the other hand, persists. Is NIO a good stock purchase at the moment? Stay tuned as we have a few mind-blowing facts about NIO throughout the video. Welcome back to our channel. Make sure to hit the like button and subscribe for us to provide you with more valuable content. In today's video, we are going to have a look into why NIO CEO speaks on delisting fears. Please note that nothing mentioned in this video should be seen as financial advice. We're bullish on NIO as of right now, but a lot of things can change over the coming years and could bring a lot of variations. So don't just rush into our recommendations. There is always the risk of losing money by investing in the stock market. With that being said, let's get back. Didi, the world's largest ride-hailing company, has announced that it will delist from the New York Stock Exchange and relist in Hong Kong. The announcement was made in a single sentence on the Chinese social media platform Weibo. They provided few information regarding the decision other than to say that they had thoroughly investigated the situation and would begin the delisting process in the following days. The announcement came as a huge surprise to Chinese technology stocks. After falling as much as 2%, the Hang Seng Tech Index, which measures the exchange's largest tech stocks, hit new lows. Other tech giants like Alibaba, Baidu, and Tencent also saw their stock prices decrease by more than 2% in Hong Kong exchange. Didi has been sandwiched between increasingly scrupulous regulators in Beijing that are seeking to rein in the country's tech giants. Furthermore, warnings from the U.S. Securities and Exchange Commission will increase the amount of information that Chinese companies must disclose on U.S. exchanges. So, while Didi's decision to relocate to Hong Kong may temporarily relieve some investor concerns, where does this leave NIO? NIO CEO William Li spoke about the current delisting fears in a recent interview on Chinese news television. The present delisting news is something that our government and the U.S. are trying to figure out, Li says. We're a global company that wants to stay that way while doing big things in diverse parts of the world. We have received no notification or prompting from our government to cease operations and list on the Hong Kong Stock Exchange. As a result, we will continue our global efforts while our governments and the U.S. work out their differences. Car manufacture is normally a capital-intensive business, Li continued. But with NIO, we hope to develop a brand that extends beyond the vehicles. We aspire to be a company that focuses on the user. It's not simple to break into the auto industry and stay alive. We are still living, despite the fact that some have vanished. We've been through difficult times before and overcome, and this time will be no different. In traditional IPO offers, XPeng, Li, and NIO all listed stock in the United States. XPeng and Li also have stock on the Hong Kong Stock Exchange. NIO is said to be looking at a Hong Kong offering, but no plans for a second listing have been published. NIO, XPeng, and Li were not immediately available for comment on the listing concerns. In the worst-case situation, Chinese electric vehicle stock exchanges may relocate to Hong Kong. The equities listed in the United States, which are actually American Depository Receipts or ADRs, might be moved to that market. As a result, U.S. investors trading in ADR would see the underlying stock in the ADR become Hong Kong listed. That seems a little complex, and it's only a hypothesis. In such a case, U.S. investors would be subject to Hong Kong exchange laws rather than U.S. ones. It may also have an impact on trading volume. Ownership, on the other hand, remains constant. Investors still possess shares in the company, even if it has been delisted, but trading stock without an exchange listing is far more difficult. Chinese officials recently issued a statement validating concerns about delisting. China's securities regulator stated that it respects the areas where Chinese companies list their stock and raise capital. Moreover, the regulatory agency stated that allegations urging authorities to pressure VIEs to abandon their U.S. listings are a total misinterpretation and misunderstanding of the agency's laws. Because of the pool of cash and investors in certain geographies and on those exchanges, companies list on specific exchanges and in certain countries. These flaws with listings don't normally come to light. Fundamentals such as value and growth are usually top of mind for investors. Hopefully, securities regulators in the United States and China will be able to resolve the issue and trading uncertainty will decrease. When it comes to fundamentals and growth, NIO is one of the most promising companies in the electric vehicle sector, with a good possibility of becoming a global leader. Because of their swift execution and talents, they've carved out their own niche in the electric vehicle market. Electric vehicles will be the primary mode of transportation in the future. Many automobile manufacturers have begun to build their own electric vehicle models. NIO shares undoubtedly benefited from the halo effect that surrounds all EV stocks last year. NIO, on the other hand, did an outstanding job of resolving technical challenges and carrying out production. NIO stock could outperform this year due to a number of reasons. To begin with, NIO's valuation appears to be highly appealing. The electric vehicle market in China is huge and growing quickly. China accounted for more than 40% of global EV sales in the first half of the year 2021. As a result, all of the major electric vehicle manufacturers are competing for a piece of this rapidly growing market. NIO had a quiet year in 2021, and, as a result, it lost considerable ground to major competitors. But 2022 is already shaping up to be a very different year. NIO will introduce 3 new models this year. The ES8, ES6, and EC6 are 3 luxury electric SUVs produced by the hot Chinese company. NIO is extending its operations outside of China while expanding its capacity in China. In Norway, it sells the ES8. In 2022, it intends to market the forthcoming ET7 in Norway and Germany. NIO's financial status is fundamentally improving. It has drastically decreased losses while significantly increasing top-line revenue. A wider range of vehicles, expansion into Europe, and breakthroughs in battery technology all open up new opportunities for growth. The EV wars, on the other hand, are heating up. The chip supply shortage is putting pressure on NIO in the short term. Battery shortages may become a bigger issue for EV stocks in the long run. Long-term success for NIO will be determined by its ability to gain a significant part of the EV market while boosting earnings and expanding beyond China. NIO now outsources vehicle production, which is advantageous in the short term but not long term. They were able to expand so swiftly because they outsourced production in the near run. We notice that NIO's revenues are continuing to rise at a strong rate, notwithstanding the COVID-19 setback, and we expect to see significant growth in the future. Due to its top-tier competitive position in the world's largest electric car market, NIO has a lot of upside potential. It also has official Chinese support, which gives it a significant competitive edge. It has a successful reputation in addition to its well-known brand, extensive network, productivity improvements, and cutting-edge technologies. Furthermore, if demand for NIO's vehicles stays significant, the business may have plans to develop an additional manufacturing plant by 2025 to 2027. The average NIO price prediction is $56.55, according to 6 Wall Street analysts who have set a 1-year NIO price target, with the highest NIO stock price projection at $70 and the lowest NIO stock price forecast at $45. In terms of fundamentals and growth, NIO is one of the most promising electric car companies with a great possibility of becoming a global leader. According to analyst estimates, revenue in 2022 will be $9.74 billion. If you're searching for a solid return on your investment, NIO Inc. could be an excellent choice. According to our AI stock analysis, there will be a positive trend in the future, and NIO shares may be a good place to invest for profit. We recommend including this stock in your portfolio since it has a positive outlook. So, there you have it. And with that, we have come to the end of our video. With continued success, NIO is going to be one of the most successful companies in the world, and we are absolutely positive that NIO stock has great potential and will hit a greater mark by 2022. We hope you enjoyed watching the video. Thank you for taking the time to watch this video. If you found this video inspiring and want to see more, make sure you hit the like button and also subscribe to this channel for more updates. Leave a comment below on what you think about NIO stock. This will help us learn your take on it and improve our understanding. As you know, learning is a mutual process.